Welcome to the most dangerous week in the financial calendar. Wall Street calls it Ghost Week, the dead zone between Christmas and New Year's Day when the senior bankers are on vacation in the Hamptons or Aspen, and the trading desks are left in the hands of junior associates and algorithmic bots. Usually, this is a time of low volume and quiet markets. But 2025 is different. While the humans were sleeping, the machines went to war. In the thin liquidity of the holiday session, a massive buy order hit the market, triggering a volatility spike that shattered the charts. Silver didn't just rise, it teleported. We just witnessed a flash crash to the upside, pushing the price momentarily to $85. This wasn't a glitch. This was the ghost in the machine, revealing the true value of silver when the suppression team is out of the office. The system is now frozen in a state of shock. To understand why silver exploded, you have to understand liquidity. Think of the market like a swimming pool. On a normal day, the pool is deep, lots of buyers and sellers, so if you jump in, the water barely moves. But during Ghost Week, the pool is drained. The market is shallow. When a massive whale, likely a sovereign wealth fund or a desperate industrial buyer, jumped into this shallow pool this morning, they created a tsunami. Because there were no sellers present to absorb the order, the price had to jump vertically to find liquidity. This proves what we have been saying for years. The low price of silver is an illusion maintained by high-volume paper trading. Take away the volume, and the price explodes to its natural level. The panic isn't just on the charts, it is happening on the streets. Within minutes of the $85 spike, major online bullion dealers in the US and Europe activated their kill switches. If you tried to buy silver an hour ago, you likely saw a maintenance screen or a sales suspended notice. They claim it is a technical error. It is not. The dealers are hedging their inventory. They cannot afford to sell you an ounce of silver at $70 when the replacement cost might be $90 by the time the markets fully reopen on Monday. The entire physical supply chain has frozen. They have pulled the inventory to protect themselves from the volatility, leaving retail investors locked out of the market during the most critical move in history. So who bought? Who caused the spike? The data points to a new player: pension funds. For decades, these massive funds ignored commodities. But with the bond market collapsing and the dollar shaking, they are desperate for Tier 1 assets before the year-end books close on December 31st. They are engaging in window dressing, buying winning assets at the last minute to show their clients they were smart. They waited until Ghost Week because they thought they could buy quietly. They were wrong. Their entry into the silver market is like an elephant trying to hide in a bathtub. They broke the price mechanism, and now they are panic buying everything in sight to secure a position before 2026 begins. Technically, the move to $85 changes everything. For 40 years, the $50 level, the Hunt Brothers high, was the ultimate ceiling. We smashed that ceiling last week. Now $85 is the new battleground. By touching this level, even briefly, the market has triggered thousands of buy-stop orders that were sitting dormant in the system. When the full volume returns next week, these orders will execute automatically. We have created a vacuum up scenario. There is no historical resistance above this level. We are in blue sky territory. The chart looks exactly like Bitcoin in 2017 or GameStop in 2021. Vertical, unstoppable. While the West is dealing with Ghost Week volatility, China is relentless. The Shanghai Gold Exchange, SGE, has used this Western holiday period to widen the arbitrage gap even further. With Western dealers frozen, China is bidding the price up to attract whatever physical metal is left in transit. We are seeing a premium explosion. The paper price might settle back down to $75, but the Shanghai price is effectively over $90. This means the drain on Western vaults we discussed in previous videos has accelerated. The Ghost Week is acting as a smokescreen for the final looting of Western reserves. In the absence of human traders, the high-frequency trading, HFT, algorithms are trapped in a feedback loop. These bots read the headlines and the price action. When silver spiked, the momentum bots bought more. The short covering bots bought to close losing positions, and the gamma bots bought to hedge options. Because there were no human bankers around to manually override the system and sell paper contracts to smash the price, the bots bid the price up against themselves. This is the Skynet scenario of finance. The machines have taken over and they have decided that silver is undervalued. If you're holding paper silver, SLV, you might feel rich today looking at the chart. But if you try to convert that paper into metal, you will face a rude awakening. The physical market has gone no offer. Wholesalers are refusing to quote prices to local coin shops. This means your local dealer has no product to sell you. We are entering the phase of Unobtainium, where the price is irrelevant because the item cannot be bought. Having cash in your hand during Ghost Week is useless if the store is closed. The separation between the haves, metal owners, and the have-nots, cash holders, happened this morning. Imagine being the risk manager at JP Morgan right now. You are on vacation. You check your phone. Silver is $85. Your bank is short 1 billion ounces. You're technically insolvent, but you can't do anything because the liquidity isn't there to cover the position. This ghost week spike is a nightmare for the bullion banks. It exposes their naked positions to the world. They are praying for the price to drop before the official end-of-year close on December 31st. If silver closes the year above $80, their balance sheets will show massive, undeniable losses that will trigger regulatory audits and credit downgrades. Why the rush? Why now? Because January 1st brings new capital gains taxes and new banking regulations, Basel III endgame implementation. The smart money is positioning itself before the new year. They know that on January 2nd, when the world returns to work, the FOMO, fear of missing out, will be global. By buying during Ghost Week, the whales are front-running the public. They are getting in while the door is barely open. They know that in 2026, the door will be welded shut. Government statistics bureaus also play games during Ghost Week. They try to massage the inflation numbers for the end of the year, but silver rising to $85 destroys their narrative. Silver is the ultimate barometer of inflation. When silver rises, it screams that the dollar is dying. The powers that be are likely frantic, trying to figure out how to suppress this move before the annual reports are published. But the market is bigger than them now. The genie is out of the bottle. We cannot forget the industrial users. Factories do not take holidays. Tesla's gigafactories and Apple's assembly lines are running 24/7. When their procurement officers saw the price hit $85 and dealers freezing sales, they likely initiated emergency buying protocols. They are bypassing the frozen dealers and going directly to the mines, offering premiums above spot just to secure delivery. This shadow demand is invisible on the Comex, but it is the real floor under the price. They are terrified of a supply chain halt in January. With the system frozen and dealers halting sales, the risk of a formal force majeure declaration by the Comex has skyrocketed. If the price opens at $85 or higher on Monday, post-holiday, the exchange may not open at all. They might keep the doors locked to cool down the market. This is a euphemism for the banks are broke and we need time to change the rules. If trading is halted next week, do not be surprised. It is the only card they have left to play. Retail investors are currently in a state of paralysis. They see the price skyrocketing and want to buy, but they can't. The websites are down or the premiums are 50%. This creates a psychological panic. When you can't have something, you want it more. This pent-up demand is building pressure behind the dam. When the dealers finally reopen, the flood of retail buying will be biblical. We are looking at a stampede into the precious metals sector that will make the 1980 rush look like a tea party. This isn't just a rally, it is a mechanical short squeeze. The shorts, banks, need to buy to cover. The longs, investors, refuse to sell. The price has to rise to find a seller. But at $85, the diamond hands aren't selling. They are waiting for $100, $200, or the collapse of the dollar. This standoff creates the vertical price action we are seeing. The shorts are trapped in a room with no air, and the water is rising. This is not just a US event. The shockwave is hitting Tokyo, Zurich, and Dubai. Global liquidity is drying up as every major player hoards their collateral. In a debt-based system, gold and silver are the only collateral that has no counterparty risk. During Ghost Week, when trust is low, collateral is king. The entire global financial system is scrambling to secure high-quality assets, and silver is the most undervalued asset on the board. Notice how the mainstream media is ignoring this? They are running reruns of Christmas specials while the silver market is melting up. The silence is deliberate. They do not want to trigger a bank run. If they announced silver hits $85, banks in trouble on CNN, the ATMs would be empty in an hour. They are keeping the public asleep while the insiders loot the burning building. The revolution will not be televised. It will be demonetized. The big question is, what happens when the ghost leaves and the humans return on January 2nd? Will the price crash back down? History suggests the opposite. The January effect, though, usually sees inflows of new money into the markets. With silver performing like this, it will attract the hot money from hedge funds and algorithms. The move we saw today was just the trailer. The movie starts in January. This Ghost Week anomaly is your final warning. The system is fragile. It breaks when the volume gets thin. It freezes when the price moves too fast. The safety of the banking system is a lie. If you cannot buy silver today because the website is down, imagine what it will be like during a real hyperinflationary collapse. The system failed today on a holiday. It will collapse completely during a crisis. The Ghost Week panic of 2025 has revealed the truth. The emperor has no clothes, and the banks have no silver. The price hit $85 and the system froze. This is the end of the paper game. We are moving to a physical reality. If you have metal, hold it. If you don't, keep trying to find it, because the window is closing faster than anyone predicted. The ghosts are haunting Wall Street, and they are demanding to be paid in silver.